Bob Cloud with this week's Precious Metals Market Update. I want to get right into three things. The first we talked about last week that I would cover this week is we've had numerous questions as gold has moved back in the news this year, even though it's had a recent pullback the last 3 or 4 trading days as I filmed this on March the 6th, 2019. So the asset allocation is where what has happened when I got into financial planning back in 1974, asset allocation was you had stocks, you had bonds, you had gold, you had real estate, you had gold, you had silver, you had foreign currencies. You had all these things that would spread your risk over different areas. And if one thing went up, something else may go down. In fact, there was a dynamic asset allocation model put out by several brokers back in those 1970s and 80s that said basically you do 5/20s. You put 20% in stocks, 20% in bonds, 20% in cash, 20% in gold, silver, hard assets, 20% in real estate or foreign currency, whichever one you felt the most comfortable with, because as the dollar went down, that foreign currency was going up. And what they would do in this dynamic asset allocation is every year they would reset it. If gold had gone up 10% and stocks had gone down 10%, they would take and rebalance it. And it was a great concept. But then money managers and investors got greedy and started thinking they were smarter than the market. So they started calling asset allocation stocks, bonds, and cash. What a joke. To think you're managing money for people and calling yourself a money manager, call yourself a stock manager, but don't call yourself a money manager. Because if you're a money manager, you're going to buy and spread out your client's risk, and you're going to look at history. Let me give you the number one example. The number one example. In 2000, gold was at 256 an ounce. Today it's right at 1,300, up 4.5 times even after the pullbacks. Stock market was 16,000. Stock market's now 25,900. It's up 82% in 19 years. How can you be a money manager and not have gold in your clients' portfolios? It makes absolutely no sense, but I'm going to tell you why in a second. So, asset allocation should go back to Ecclesiastes 11:2. Certainly, if Solomon was the wisest man that ever lived, and God said he was, that's good enough for me, then he spread his wealth 7 or 8 ways because he didn't know what disasters would come upon the land. Did he have more cattle? Did he acquire more land? Did he build more things to travel with? What did he do? Did he buy more farming land? He diversified what was available to him at the time, but the premier thing was gold and silver, because that's what the temple was built of, and that's what transactions from the book of Genesis to 1971, just think about what I'm saying, over 6,000 years, money was gold and silver. Paper money, you never saw a stock certificate in the Garden of Eden. Of course not. You saw gold and silver, and that to me is what asset allocation is divide your wealth 7 or 8 ways, because no one knows what disaster will come upon the land. So why don't money managers that are supposed to look after you put you in put you in stocks, bonds, and silver, stocks, bonds, and cash? But if you scream loud enough, they will put you into an ETF of gold and silver. That's another paper investment. You're not buying physical silver. You're buying paper, a fraction backing of gold or silver to back what you're buying. In fact, you can't get physical gold and silver out of an ETF unless you're someone that has over $200,000, and then there are things that allow you to get physical gold or silver out of your ETF. But ordinarily, you have to cash it in cash in your paper certificate, and you get your paper money back. But it's not gold and silver. So why does a money manager, because he makes a percentage, if he's charging you 1%, to manage your money a year, if you took 100,000 out of a million, 10%, and put into physical gold, he makes nothing on that 100,000. And that is 100% the reason money managers don't like physical gold and silver. I can build you an ETF that's far superior to what you're buying if you're buying GLD or SLV or any of these, because I'm going to get you the storage fee and segregated. You're going to have your name on the gold and silver in the COMEX, insured by Lloyd's of London warehouse, and pay the lowest storage rates in the world. Let me tell you this way. These ETFs are paying 50 basis points out of the ETF to store the metal. I'm way below that. It's so low I can't talk about it on the internet. But if you'll call us at 800 and get our 800 number and talk to us, we'll be happy to tell you the fees and how the fee structure works. So we can give you a lower storage rate, segregated gold and silver in your name, and you'll have it right there to deal with every day. So just remember that there's a reason the financial advisors are not doing what they would say they would do. So we want you to know that there's a better way to do that. So hopefully you can do that, and give us a call. We can go over it. But buying real gold is part of your portfolio. Buying real silver is part of your portfolio. And if you'll do that, I think you'll be very well off. You'll be in extremely good shape if you do that. So hopefully we've been over why the money manager doesn't. We've been over why you should divide your wealth into several different ways. The most logical ways are stocks, bonds, cash, gold, silver, foreign currencies that go up when the dollar goes down, real estate investment trust. That's where I have my money, in those different baskets. I have 7 or 8 different baskets to have my money in, and you should too. Now, allocating is a different story. You've got to decide what you want 20% in and 5% in and 15% in, and you've got to build that as you're led to do. But it is something that gives a call at 800-247-2812, and we'll be happy, Dan or Kathleen or I will be happy to go over this. So what we've covered today is asset allocation, God's way. We've talked about the different areas or baskets you can put it in. We've talked about if you don't want to own gold physically, we'll prepare your own ETF, set you up your own storage account at a tremendous discount to what you're paying in GLD, and you have real gold or silver in your name that you can have anytime you want. Have it delivered to you. You just have to pay the postage and insurance. So we've talked about that, and certainly we've talked about the asset allocation of money managers and why they don't, and then the actual diversification itself of that. So hopefully you know a little more about asset allocation than you did. Once again, we appreciate all the nice emails we get. And remember, just send us something you want me to cover, and I'll cover it right now. I don't have anything for next week. So if you get something in, we'll try to cover it. If there's any questions about premiums or how it works, and items that are reported and items that aren't, that comes up frequently, but haven't gone over that recently. So once again, if you're looking for a self-directed precious metals IRA, give us a call. We can help you get a custodian. We can be your broker. We can be your broker and representative, but we cannot be your custodian. So if you're looking to roll over an IRA, give us a call on that. So hopefully we've covered enough areas this week. With this week's Precious Metals Market Update, this is Tom Cloud signing out.